Dead cat bounce, market turnaround, or just the chase for yield? What's up, everybody? Welcome aboard to Bubba's Bottom Line. Todd Bubba Horowitz with you. It is Sunday, June the 9th already. My goodness, you wouldn't know it by the weather in Chicago. It's been nothing but cold and rain since spring began. Of course, we know in Chicago we go right from winter to summer or construction to construction. But in the meantime, markets had a dramatic turnaround last week, and we'll get into that when we talk markets, but a major up move. And what did that do for our positions? Well, stay tuned. We'll tell you what we did. In the meantime, we've got the continuing trade wars, the new trade wars, which are, of course, the tariffs on Mexico. And again, I'm in perfect agreement with what's going on there. I think that we should do something about the border. I don't know about you, but certainly I'm tired of paying for people that don't want to come to this country illegally. I think that we finally have seen that somebody's going to stand up for it, and I think that that's the right way. I think it is a crisis on the border, and I hope that it continues. Now, of course, it looks like since about Thursday or Friday, they've come to some sort of a resolution, which will then change, and we will get back, and Mexico is going to start to help and keep people back before they get here, which of course makes sense, but of course so does the wall make sense. Again, I think it's great that people want to come to this country, but I think they should do it the correct way and not come in illegally. I think that's just as simple as that. We in this country have to abide by laws, and I think that people coming into it should have to abide by the same laws without getting the benefits and forcing us, the taxpayers, to pay for it. That's just, again, just one man's opinion. It happens to be mine. China is now threatening consequences on the trade wars. Now, you know, China's in a whole different situation and a whole different setup of what's going on. They don't have the same issues of being to be done now. I mean, listen, they're a communist regime anyways, so does it really matter? And can they try to afford to outweight Trump, so maybe a Biden who will kiss their ass and let them have everything they want and let them rob America blind, or one of these other jackasses that may be coming into office? You know, again, they can afford to wait it out because they don't care about their people. Let's be real about what goes on, okay? And the more of the indentured servant slavery that goes on in China. Okay, I mean, you know, do we think it's dramatically changed all of a sudden? Yes, they're getting a higher standard of living and they're creating more middle class, but let's face it, they still, you know, do things and obviously work cheap, which is why everybody wants to import, you know, from there and not bring the manufacturing back to America. But at the end of the day, okay, you know, again, I'm in full agreement of the tariffs. I think that obviously they've been stealing intellectual properties forever. As long as I can remember, I remember them coming to trade shows with cameras, taking pictures of things and then recreating, you know, the same item. And of course, they have done it faster and cheaper. That is one thing you have to give China, is they create products faster and cheaper. Of course, their labor cost is virtually zero. But again, they're good at it. They're good at stealing the technology. And of course, that's, you know, kind of the way of the world. But I mean, don't all companies try to get the best technology? So maybe just their country. You know, again, you don't have to agree with everything they do, but again, they are certainly willing to try to wait it out until President Trump gets knocked out of office in 2020, if he does. Now, again, I don't believe that he will. I think that we've seen the left trying to do everything they can, including to just be destructive to the economy. But we're still happily motoring along. Of course, I do see, and I've said for the last couple of weeks, I do see the signs of an early recession. I think that when you look at what's going on, things are not quite as perky and rosy as they would, witnessing by the ADP jobs number last week, and of course our jobs number, plus the revisions down of previous months. Now, I think some of this is natural, and I think that you're seeing some major issues that are starting to occur. And I think you can start, though, by looking at some of the banks. I mean, again, this reduction in rates is continuing pounding down of the interest rates. Again, only to try to keep the economy going. Well, again, I have to ask the question. Forget about the inversion of the yield curve. Forget about all that technical crap, the Phillips curve, and all this bull. Okay, it's just a pretty simple question. Okay, if we are as strong as they say that we are, why is it that we have to continue to bring rates down to try to enhance liquidity around the globe? So, where is that coming from? Well, again, we know that there is a global meltdown. I mean, that is not a secret, okay? And obviously, as they like to say, the United States is the cleanest shirt in the dirty laundry. But again, doesn't that indicate if we can't get true inflation other than wage inflation, and if we can't get a really growing economy without lowering rates, does that not suggest that there's a potential problem here? Okay. Again, I just asked the question, but of course the bond markets, the bond options have been pricing in not a quarter point rate cut, but a half a point rate cut, and not extended out in a period of time, but sooner rather than later. So once again, it does look like the Federal Reserve is going to blow it. And okay, that is no surprise. That's one of the easiest predictions to get right in history. I mean, just look at the 106 years. It's like the equity markets go up year over year, just not every year. Well, the Fed blows it every time they have the opportunity. So again, if we just look at pure statistics and not worry about some of the other things, we know that they're going to screw it up. I mean, so here we've got Chair Powell makes his big announcement, either it was Monday or Tuesday, basically that they're going to be accommodative. They're going to continue to kiss the ass of Wall Street and leave rates lower. Again, okay, I guess that means that they see more problem. I don't believe that this is because President Trump is putting pressure on them. I'm assuming that they see more problems coming ahead in the economy. But of course, they have created a lot of these problems with their ridiculous policies. But of course, as I've said many, many times, it's hard to regulate when you're trying to regulate from a textbook. It just, again, businesses, and make no mistake, the United States is a business run not from a textbook. The textbook can give you a guideline, but you have to be able to make decisions, okay? So the rate cuts did push up, not the talk of rate cuts did charge a big rally, okay? And I think that, again, it's something to look at, and we will talk about that a little bit later. But I think that you can blame a lot of the trade war stuff on China, again, waiting for to see if the current administration is going to get knocked out. Again, I think that's an issue. I think we've seen a dramatic change in our overall economy. I think there's starting to be some troubles. And I tell you, one of the things that really gets to me, okay, is the pundits that continue to talk about, well, the 10-year is down to 211, it's down to 206, it's going lower. And why wouldn't you want to put your money in the stock market? Because the dividend yield is higher than 2%. And again, I don't disagree with any of that, okay? But if you do put your money in the stock market, okay, versus the bond market, okay, you are not guaranteed to get the return that you're seeing today. We know that the dividend is high, right? Let's say it's 3%, whatever it is. However, what you're not counting in is the depreciation, okay? If a stock goes down for 4 or 5 years, okay, then you're getting the stock falling down, so you're losing a big chunk of your capital, although you're getting the dividend. Remember, dividends are paid out from the stock, okay, that come out of the stock, and companies disperse that money, okay, to you at a rate, and then you hope for growth back in the stock. Now again, I'm a big believer in the stock market. So again, this is not a knock on equities. Okay, it is a way that is reported. Now, if you're 75 or 80, okay, you might not want to be in the stock market. You might be happy with the 2.5% yield over the next 10 years if you're going to need the money, and you don't want your principal to be knocked down at all. I think that is something that they do not cover properly, because if I put my money in 10-year treasuries, I'm getting my 2% back, okay, at the end. Okay, I'm getting my money back plus the 2%, versus I could have a problem in the markets for 10 years. Again, I'm not saying we would. And again, I'm a big believer, but I think you have to weigh in your own mind where you want to be when it's all said and done. And I think that's very much misreported, because it's not an automatic that if you're in something, and that if we get a 50% haircut in the market, which is certainly realistic to think that we could get, okay? Again, it would not surprise me to see another 40 to 50% haircut in this market at some point. So if we do get that, and it takes a long time to recover, so what do you do if your nest egg has gone from 50,000, well, 50 is not what we call nest egg, let's say from 500,000 down to 250, yeah, you're getting dividends, okay? And actually the rate of dividend goes higher as the stock falls, because the percentage gets bigger based on the price of stock. But if you need the money, then what do you do? Okay, again, so to me, I find it disturbing how we try to always turn issues into one direction and make it sound like it's, oh my God, it's so good, how could you not want to be there? Now again, I don't have any money in bonds. I wouldn't put 10 cents in the bond market myself. But again, depending on who you are and what you want to do, I think it makes a difference. And I think that they do a horrible, it's a tragic job that they do, because they mislead and misguide so many people as to where we should be. And I think that's a much bigger problem that has to be addressed at some point. I find that to be troubling, because I think it misleads the average investor, who's the occasional tune-in that isn't a trader, that's just hoping to be able to make enough money while they're working to retire comfortably in the same style they had before. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out here for a break. We'll be back with more of Bubba's Bottom Line here on Sunday, June the 9th. Everybody, what's up? We did a great webinar yesterday on our new equity portfolios. If you'd like to check that webinar out, please email me. I urge you to email me, because it was one of the best. Okay, it was great. We got our points and showed everybody how to create synthetic stocks and do the whole deal and actually build the portfolio, especially if you're behind. So if you want to get a hold of that webinar, all you gotta do is email me at bub@bubbatrading.com. I will send you a copy. It's free. Check it out. See what you think. In the meantime, also, don't forget about our high school investing program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. In the meantime, let's get back to Bubba's Bottom Line with me, Todd Bubba Horowitz. Welcome back to Bubba's Bottom Line. This is Todd Bubba Horowitz with you. It is Sunday, June the 9th. The Raptors look like they're going to wrap up the NBA championship. It looks like Golden State has totally fallen off the map, and it looks like the St. Louis Blues are going to be Stanley Cup champions. There you have it. And of course, it looks like the markets have turned around, and of course we were short, and then we said last week that if certain levels would force us to turn around, and certainly now after last week's monster rally, and it was a monster, and it was painful a little bit. We actually had to reverse on Friday after the jobs number. Well, actually, we were reversed before the jobs number, because those signals are dailies, and they change, so they change the next day. So we were actually long going into the jobs number, obviously short, and certainly I'm not thrilled personally to be long here. But again, this is why people fail in markets, because they decide that their opinion is smarter than the systems that they're trying to use. So of course I am long, and again, it looks like we could go higher, but again, I wouldn't be surprised to see this reverse. But again, I am not going to get in the way of the work that I do that tells me that maybe we're going to see a little bit of further buying strength. Maybe this rate cut deal is something to it. In the meantime, we had a huge rally, taking back much of the losses, came back and took out all the downtrend lines, and the Dow was the strongest, which is never a great sign. Okay, let's be clear about one thing. When the Dow is the strongest index, okay, on the board, that indicates the most amount of fear in the market, okay? Because again, the Dow is basically high dividend paying stocks, big conglomerates, the whole big deal, versus what you really want to see in a true bull market is the NASDAQ and the Russell the strongest, because obviously NASDAQ tech, high flyers, and of course Russell, American companies. So to me, it still shows some problems. Now the NASDAQ, the NASDAQ is going to turn into a buy. It was not a buy on Friday. We were still short the NASDAQ on Friday, unfortunately, but we were. Okay, but that is turning to a buy now as well. So the indexes, except for the Russell now, have all become on the buy side. All right, and of course, where's that $100 oil? Everybody kept telling me we're going to 100. I kept saying no. Okay, we're sellers at 65, we're sellers at 60, we're sellers at 55. We hit all of our main levels right down, all the way down to 50 last week. Now, I think we go below. I think we go into the 40s now. Now, again, I expect to see some sort of a rally. Okay, again, we don't ever expect any market to go straight in one direction. We expect markets to trade and then go to levels and find them, and either, if they're going up, then they pulled back, they're to bounce, or if you look for them to go down, they go to resistance and come down. So that's what we would expect to see. But I expect to see oil but potentially totally fall apart here now. Okay, again, would not surprise me to see the mid 40s in a fairly quick. I mean, again, not this week, but it wouldn't surprise me to see it fall apart. I would certainly expect to see somewhat of a push rally, try to get back to 55 or 56 before resuming the down action. I mean, Friday was pretty interesting action to begin with. So again, we would look at what happened with gold. So gold, we were playing in last week. I mentioned that although we were still short gold, it looked like it was starting to peak and maybe turn the corner on the bottom end of it. And of course, we turned to the long side, and the gold did rally, and it did rush up to 1350, which was our first resistance from a while ago. Now it's pulled back a little bit. Now again, we would expect to see gold now bringing 1400 back into play. The key will be to get through the 1350 level, and then where does it come on the pullback? But looks really solid. Okay, the grain markets continue now. Again, we kept saying we're buyers. We were buyers at 340 in corn. We were buyers at 360 in corn. We were buyers at 380 in corn. We were buyers at soybeans down in the low 8s. Buyers of wheat, and of course, they have all started to move higher. Okay, we've seen a big rush up in the grain markets, but of course, if you watch the news, they keep telling you how much trouble there is. Okay, and that grains might be going to zero. Okay, and they somehow find everybody who wants to talk about how bad everything is versus what's the actual price. Okay, again, we can only measure something by what it costs us to produce and what we can sell it for. Okay, well, certainly the cost of production has not dropped than when it was when we were getting 340 for corn or 350 for corn. Now corn is well over $4. So it must be something must be going good for the direction. Now we know there's some weather problems. We know there's some planting issues. So there's going to be some shortages, which is something that we've talked about here for months. It was not the trade wars that were creating this stuff. It was the oversupply. All of a sudden, with a horrible spring throughout the United States, there's not so much going to be not so much oversupply anymore, which obviously will create demand, and we'll start to see higher prices, which is exactly what we're seeing. There is a chance this year that we could possibly see a big market in the grains. Okay, and right on cue, as perfect as I could ever explain. Last Monday, we had a crop report. I think it was Plagish Praying, they call it. And of course, it was very bullish. And of course, Monday night, the grains gapped higher. And I go, well, that's got to be a sell. I mean, this is, again, they've already priced this news in. And sure enough, by morning they were lower. And by the end of the week, they were lower. And we're coming back down to some support levels, looking for an opportunity to jump back in and become buyers. Meats, okay, now we thought the cattle had found some lows, and they looked pretty good all week, but a funny thing happened on the way to Friday, okay, and they fell hard again. Now again, We still like them, but it is now somewhat of a concern here. Again, I thought last week, 2 weeks ago, a lot of the big sellers were based on forced liquidation. Okay, it didn't look like that it was breaking down. Now, again, I think the first couple of days this week will be a key. We might have to just, take our losses and say enough. Sometimes you just got to cry. But I think the real big story in the meats is not necessarily cattle. I think it's the hogs. You've had the news pundits trying to push these hogs higher for weeks, months, and, talking about the African swine flu, new cases found here, Smithfield doing this, all these reasons. Yet hogs continue to work lower. Okay, you explain to me. Now, again, this is what I try to explain all of the time, is that more often than not, news like that is priced in. Okay, you have to remember, the big funds, the big banks, they've got people working the news wires like they're sleeping with them. They're in all the time. They're well ahead of the street. They've already made their moves. So when we saw the big rush up in hogs, when we went over 100 back, I don't know, a month ago, 2 months ago, that was the sign. They knew they were pricing this action in today. Okay, so the markets, it looks like hogs. Now we expect hogs to potentially hold here about 84, but if they break here, they could go all the way back down. It's going to get ugly. We're already in the typical this time of year backwardation, which means that July hogs are 84, October hogs are 70 something, and December hogs are cheaper. So we're going backwards, which is not a bullish sign, that's a bearish sign. Okay, backwardation here is a bearish sign for it's just like in oil and meat, same thing. It's not a very bullish sign. Okay, so and of course Treasury bonds continue to fly to the moon. Again, we got long Treasury bonds. We took our losses the first time on the way up and turned around and got long. And again, this is why I say you can't fight what's going on. You either go with it or you watch it. Okay. If you think you're smarter than the market, then you could be busted trying to sell the Treasury bonds, which have now continued to go up by leaps and bounds. It is amazing at the numbers that they put up there. But that's just telling you that there's some issues out there. 10 years are down, like I said, about 2.1. I mean, 30s are under 3% again. The yield curve is inverting. And they're just telling you that right now, and until further notice, the bonds are going to go higher. Okay, so why fight it? So either get in and join the party, which I would not be a new buyer with new money today. Okay, because again, they've already gone up so far. I would look at a pullback and become a buyer until the signal changes and goes to the short side. But right now, there's no look at the short side inside. Okay, I mean, again, why do we want to fight and try to beat it down? So it's easier to go with the crowd. And of course, cryptos continue to have some nice price action. And again, look like they want to go a lot higher, and I think that they will. So the outlook for the week is right now, it looks like we go higher. Okay, anything can change. I mean, again, tonight we could be lower. Obviously there's never any guarantee. Okay, but right now, I'm long. Doesn't make me correct, but I am long, and I'm going to stay long until my algorithms tell me it's time to get short again. Personally, I'd like to be short, but again, there's no sense to fight the market, the math, or what's happening. Okay, I think if you remember that, okay, that nobody is smarter than the market. Okay, because the market never gets sick, it never gets tired, it just trades 24 hours a day, 7 days a week. There's always something going on. So why not follow the money instead of fight the money? This is Todd Bubba Horowitz, and this is Bubba's Bottom Line. And of course, it's Sunday, June the 9th. We're going to step out here for a break, and we'll be back with my commentary right after the break. Bubba's Bottom Line. Everybody, just want to remind you, I did just a phenomenal webinar yesterday on our portfolio management using some of our proprietary algorithms and putting together big portfolios that you can actually use synthetic stock to get into. You want to check it out? The webinar is free. Just all you do is email me, bob@bubbatrading.com. I'll send you a copy of the video. Check it out. Let me know what you think. If you don't want it, hey, don't take it. No sweat off my either way, one way or the other. I'm just offering some of the things that we do. You want to check it out? Great. If not, hey, no big deal. In the meantime, don't forget our high school program at Patreon, patreon.com patreon.com/Bubba Trading. It's patreon.com/Bubba Trading. We're rebuilding the entire site once again and getting ready for the new school year. So check it out. In the meantime, now, let's get back to Bubba's Bottom Line, Todd Bob Horowitz, and my commentary. Welcome back to Bubba's Bottom Line, Todd Bob Horowitz, and always great to be with everybody. And of course, every week I get to put out my word and what I'm seeing. And I tell you, it was interesting. Last week, Walmart had their big meetings, their annual meetings, and of course, Bernie Sanders got an opportunity to speak there, and I thought it was interesting. Look, I think it was great that they let Bernie speak, although he's a wacko. Okay, and of course, with all his millions, why isn't he giving so much money back? Why does he have millions and want everybody else not to have anything? That I don't understand. But in the meantime, forget about that part of it. Okay, they let him have a speak and say that he believes that the employees should be on the board. Okay, now again, I don't have a problem with that if they're qualified. I have no problem with that. Okay, and that Walmart should be paying $15 an hour. That I have a problem with. Again, I think we forget in this world that if you outprice cheaper employees, okay, then they're going to be replaced by machinery. Okay, it's that simple. Okay, they've already done it at Domino's Pizza. They've already done it in many other places, and it will continue to be done because, again, if you're gonna make wages where the company can't make money, they're going to replace it with equipment. Okay, it's that simple. McDonald's is doing it. Everybody's doing it because they're tired of hearing the bull about the minimum wage. I mean, Walmart pays 11 something an hour, I think, or 10, whatever it is. In the meantime, the minimum wage, I believe, is 7.25. So, of course, the Walmart CEO did a smart thing and says, well, they should raise the minimum wage because let them raise it to $8. We're paying 11, right? So, again, he got a couple of bonus points, but Bernie Sanders looked like a fool, as usual, because at the end of the day, wages should not be mandated by the government, by the federal government, okay? Wages should be mandated by supply and demand, by the free market, okay? That's, right now, there's a lot of jobs paying a lot of money, giving a lot of perks, including Walmart, with their college and everything else, every deal they're offering, because they can't get help. The more they can't get help, the more they're going to raise their own wages. They don't need to be dictated by the government to tell them to raise wages. Bernie Sanders should get a job, okay? He's never had a job in his life, so let him go get a job and let him pay more, okay? That's the whole deal. All the guys who want to have more taxes and be socialists, give up your money. Don't tell me what to do with my money. Walmart is a very successful company. They pay a fair wage to what they have. And it doesn't matter if the CEO makes 20,000 times what the low employee makes. Again, the board decided to pay him. He doesn't get to write himself a check. Those things have to be voted on. Okay? So it's done by the correct system. Again, listen, I wish it was me. So that's the big problem. So again, government mandating minimum wage and what we should be paying and what we should be doing is a joke. And so is Bernie Sanders. This is Bubba's Bottom Line, Todd Bob Horowitz. As always, I thank you so much for being with me. Enjoy the Stanley Cup if you're a fan. I look for the Blues to win, and I look for the Raptors to sweep out, to knock Golden State out tomorrow night. Have a great day, everybody. Have a great weekend. Bubba's Bottom Line. We'll see you tomorrow with Bubba's Daily Update, and of course, every Sunday with Bubba's Bottom Line. Have a great day, everybody. We'll see you later.